Hello, and welcome to our channel. Today we are going to discuss some of the tips and tricks to increase your credit score, or maintain it for that matter. Having a good credit score is critically vital if you want to get a loan or credit card for lower interest rates. As easy as it may sound to you, it becomes difficult to improve. Maintain your credit score, as the reason for not having good credit is not apparent at first. A credit score is usually a three-digit score, often ranging from 300 to 850, that represents your credit risk or the likelihood that you will pay your obligations in a timely manner. Based on your credit score, you are categorized into subprime borrowers if it goes below 640, and therefore the lending institutions usually charge higher interest than the conventional charges in order to secure themselves from taking more risks. Along with that, they may also need someone else as the cosigner, more like a surety on behalf of the borrowers with low credit scores. Before we get into the details on how to improve your credit score, we want you to subscribe to our channel so that you don't miss any upcoming videos that will help in improving your financial knowledge. Number 1. Pay off your credit balances. One of the reasons that your credit score is going down is that you have more liability to be paid off than your actual income. Working on your outstanding debt will help you maintain a low credit use rate, which can help you to improve your credit score. Well, if you are wondering who plays an important role in increasing your credit score, here it is: the creditor. Each creditor has to update the creditor's report of the balance paid by the borrowers, called the credit report. Now, when it comes to credit card companies, they send your statement of balance to the credit agencies once a month, although this can vary depending on your issuer agency. It's preferable if you can pay off your balance each month as quickly as possible. You can also make many payments toward your amount throughout the month to keep your balance low and make it easier to manage your spending. Even if paying off a portion of your debt is beneficial, paying off the entire sum will have the greatest and earliest effect on your credit score. Number 2. Increase credit limit. Yes, you heard us right. The ratio in which you take credit should remain constant irrespective of your credit limit, because utilization of your credit limit plays a very important role in improving your credit score. The larger the credit limit you have, the lesser the utilization takes place, and it is always advisable to use only 30 to 40% of your credit limit. You can increase your credit limit either by increasing your credit limit that you are on currently, or can get a new credit card with that provides you with a higher limit. But before applying for a new credit card, keep one thing: it is not for you to spend more or buy expensive things with your new credit card. Oh, did it sound like your mom? Well, it is really important for you to realize that increasing the credit limit is to ensure that you have a constantly low credit utilization rate, which will help you increase your overall credit score. Avoid applying for too many credit cards in a short period of time, as this will raise a red signal with the creditors. Your credit limit can also be increased by opening new accounts, but as you know, too many cooks ruin the dishes. Each application can result in a credit check, which can lower your credit score slightly, but inquiries can build up and have a cumulative effect. Opening up a new account reduces the average age of existing accounts, which can lower your credit scores. Number 3. Don't miss any payments. One of the most essential criteria in determining your credit ratings is your payment history, and having a long track record of on-time payments will help you attain good credit scores. To do so, make sure you don't go more than 29 days without making a loan or credit card payment. Payments that are more than 30 days late might be reported to the credit bureaus, lowering your credit score. You can also set up an automatic payment system for your monthly bills, and if you are having problems affording those, then you should inform and discuss it with your credit card agencies. Paying off your debts timely will help you boost your credit score. Payments that are 30 days late, on the other hand, can have serious consequences. If you make late payments, no approach for improving your credit will work, and it will be kept so for up to 8 years in your credit reports. Make sure that you have a clear history of payment. You would not want to be on the defaulters list, or do you? Number 4. Authorized User. An authorized user can benefit from the primary cardholder's credit history. The authorized user can see the primary cardholder's favorable payment history reflected on his or her own credit report if the primary cardholder has a long history of paying on time and in full. A 2018 study made by Credit Sesame just 3 months after becoming an authorized user on someone's credit card. Persons with an acceptable credit score had their credit score improve by about 11%. It might help your credit score if the principal cardholders issue or reports authorized user information to the credit agencies. This has a potentially higher impact on your credit score if you are just a beginner, and it will be lesser if you have built some credit of your own. Number 5. Maintain and review your credit reports. Your credit score could be affected by an error on one of your credit reports. You may immediately improve your credit by disputing credit report inaccuracies. Each of the 3 main credit bureaus is obligated to provide you with a free report. You can also apply for a report online and check for errors of any sort. Let's say a mix-up of your credit activity with someone else's or late payments, even if you have paid it on time on your credit score report. Now, when it comes to credit score models, such as FICO, there are 5 heads to calculate your credit score under them. 1. Payment history. It consists of up to 35% credit that is allowed to be used in order to maintain your credit score. 2. Amounts to be paid. The limit for such outstanding payments is up to 30%, and if you exceed the limit, then credit inquiries can be initiated against you. 3. Credit mix. According to this model, FICO, if you can afford to pay different bills, such as for mortgages, loans, etc., it makes a good impact on your credit score and increases your credit value eventually. The limit that is provided for such mix-up is 10%. 4. Length of credit history. It matters because the longer is the age of your account, the more value it adds. The limit is up to 15% according to the FICO model. 5. New credit. Opening up of accounts every now and then is not a problem until you do it in a short span of time, which puts you at risk and will also be reflected in your credit score. The limit provided for such actions is 10%. Number 6. Use a secured credit card. A secured credit card is another option for building your credit. This sort of card is secured by a cash deposit, which you pay in advance and is generally equivalent to your credit limit. You use it just like a regular credit card, and timely payments help you build credit. Find a secured credit card that notifies all 3 main credit agencies of your credit activity. Alternative credit cards that don't demand a security deposit might be beneficial for you. Number 7. Rent credit and utility payments. If you think that you will somehow pay your rent, if not on the due date, then probably a little later. But you might not know that late or irregular payments can also reduce your credit score. Your regular rent payments may be included in your credit reports if you use a rent reporting service. Rent payments aren't taken into account by all scoring models. For example, Vantage scores do, but FICO doesn't. Get it all. If a potential creditor checks your credit reports, rent records will appear and a long history of consistency. You can also opt for boost services that help you regain your scores of credit, but in a limited way. Although boost is instantaneous, rent reporting differs, with some services providing a quick history of the previous 2 years' payments. Without it, establishing a track record of timely payments could take months. So these were some of the do's and don'ts that will help you increase your credit score. If you liked this video, please give a thumbs up and do let us know any specific topic that you want us to discuss. We will make a video of the